Hey Norma, jump on real quick and turn on your audio just to make sure my picture is not reversed. It's not reversed on you, right? Norma? All right. I'm going to anticipate that we're good. If everybody has issues, please do me a favor and just log in and tell me that my picture is in reverse mode. Today we're going a little different. I'm going to try and bring this live in two formats. So I'm going to take this live on Facebook, the internal communication page, whilst at the same time trying to use a Zoom meeting. So hold on one second. Okay, so take this off, and just again to give you guys a show. Yeah, are you seeing my screen right side up? Does it appear so? Norma, yes? I'm gonna go with yes. I'm gonna put you on mute for a second. All right, so we're gonna jump into this, guys. Today we are talking about how to use, and she just chatted me. Oh, you can't hear me. Oh. Is everybody having trouble hearing? Yes? Give me a thumbs up if you can hear me. Christina, can you hear me? No? No? Test, 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 test. All right, can you hear me now? Sounds like yes. All right, let's go ahead and try this and see if we can get audio going in the right way. Okay, so guys, today we're talking about using what I call Biggerpockets, but basically this is a class to kind of function in how do we use, how do we create benefit to our investor clients, okay? And the key here is that knowing that your investor clients has some ability is ideal, because if we know that our investor clients are an extra avenue for income, we will understand why this is so necessary whenever we're having conversations with them, because they ask different questions. They ask questions about things like cap rates. They ask questions about things like, what is your net income after everything? What is, what are management costs? What are all these details? So it's key and very important to understand as you're going through a transaction, if you're talking to an investor client or if you're talking to a standard, run-of-the-mill purchaser, because it's going to make a determination how you approach them. And the reason that I'm showing you this training today is because I want to ensure that you are getting a extra tool in your toolbox to ensure that you have a best conversation with them. So today what we're going to be talking about is some analysis reports. Now, I'm going to give you, what my goal is always is to try and find you the best tool out there to identify what is the easiest, cheapest route to create value for your clients and to create value for yourself. So in that, I use Biggerpockets. Now, I pay for a premium status. If you don't want to pay for a premium status, you might not be dealing with that many investor clients right now. So what you would do is just pay for or you wouldn't pay for it, it's just a basic account. I believe they allow you to do up to 5 reports, and that way you can do 5 clean reports. If it becomes a valuable asset to you, then feel free to subscribe to it. There's also some podcasts and some other details in there that are really powerful. But at that concept, what we're going to be talking about is just the free tool set, okay? So given that free tool set, and by the way, because I don't have it up on my screen, if you need to ask a question, please just do me a favor and unmute yourself and ask that question, and I'll stop for you. So today what we're doing is talking about Biggerpockets, and this will be posted into the YouTube page, but it's Biggerpockets. I've already created an account. The first time you go in, you'll create an account. From there, you're going to go over to calculators or tools and then into calculators. So we have a couple different calculators. We have a rental property calculator. So this is for those people that are looking to purchase a rental property and going to find out what kind of detail that's going to be for them. You have a fix and flip. This is ideal for identifying what a holding cost would be for a timeline, how much it would be to buy a property. A lot of people love to buy flips, but the downside when they're buying flips is they don't necessarily understand a lot of the detail work that comes out from buying that flip. You have a BRRRR strategy. So BRRRR basically comes down to buy, rehab, rent, refinance, repeat calculator. This is ideal for your clients that want to gain some value. This is ideal for you as well. This is the quickest way to wealth. Buying properties, rehabbing them, renting them, and then refinancing them. And the key here is that you can get in for a lower amount of money and hopefully cash out your entire input money back to you so you can use it again. So your usable money, your cash on hand, you can put it into a property, rehab it, then rent it, and then refinance it because you gained enough equity to bring all that money back out. Basically getting into a property for no outlay of cost other than that initial risk of getting into it, renting it, rehabbing it, and so on and so forth. But then you pull all that money back out and you repeat it on a regular basis. Okay, and then the other one is a wholesaling, along with a mortgage payment calculator, a 70% rule, and an Airbnb. I'm going to leave most of this stuff on this column alone today, and we're just going to be talking about this stuff because this is the investment stuff that you'll be dealing with on a regular basis, whereas this is the stuff that you kind of might have to step out of a general comfort zone in order to identify how this might be valuable to your business. Okay, so today let's go into a rental property, basic run-of-the-mill rental property. So we start with a basic property. Okay, so start a new report. Like I said, as a free, you get 5 reports, and then you'll have to purchase it from there. I have the subscription service, so I get as many reports as I want. Basically, we're going to call this test service. Okay, and basically what we're doing here, guys, is we're trying to identify what is going to be the rental rate that this property needs to be at and what purchase rate we need to purchase this at in order to get the best deal for our clients. Okay, zip code, property tax. All right, so we're going to call this house $100,000 just so we can keep numbers nice and clean. Property tax is going to be approximately $3,000, 3% in El Paso. In Las Cruces, that number would be different. Add the MLS number if you do have it, just because it kind of keeps you a reference point. If you had a photo, you would throw a photo in here. Add a little description. This is key for whenever you create the report at the very end. Add some details like it needs this, it needs that, it needs a couple, new flooring, new electrical, so on and so forth. It just kind of keeps everything up to speed. You can also add other property features as well. Now you're going to go into price. So once again, we're going to call this $100,000. Our after repair value. So we're going to identify that after we do a little bit of repair, we're going to make this worth $120,000. Now, purchasing closing costs, this is where you need to know your figures, okay? If you click on this, this will tell you what typical numbers are. You can also enter a cost breakdown if you wanted to get a little bit more in depth on it. For this purpose, I'm gonna call it 1%, okay? So $1,000. Estimated repair cost, I'm gonna say it's gonna cost us $5,000 to get this thing started. Once again, you can get into a cost breakdown which details out numbers. Loan details. Now this is key. Understanding why you need to know this is because cash on cash return mixed with just a simple cap rate, these are where these details come into play. By the way, a bunch of the terms that I'm using, if you have any questions on them, the best place that I've found to figure out real estate terms, investment terms, any of those things is by simply going to Investopedia.com. So basically this is a really quick encyclopedia of investment terms, and you would just type in whatever information question you have. They have a lot of stuff in here, but like I said, great place to get some insight on things like if I wanted to find out what is cap rate. Okay, it's going to give me what is a cap rate, what is capitalization rate. It's going to give me some details on that, and then you can go into actually definitions. So what is the capitalization rate definition? Okay, just a kind of informational basis where I'm using these terms from. So in here I have loan details, cash purchase, down payment of purchase. So we're going to call this a cash purchase. Okay, typical cap rate for the area in El Paso, we hope to have about an 8% cap rate. So I'm going to type in typical cap rate. I'm going to press next. Now, here's where I'm actually getting into some details. If you click on this rental meter, they give you a way to analysis up to 5 properties. You can also always ask our resident expert, Rob. He is going to give you a general idea of what that could rent for, and he can do it pretty quick. That also opens the dialogue to transfer it over to our property management division if they do decide to go that route. In this case, $120,000, I'm going to say my rent is going to be $995 a month. I don't have any other monthly income, but if I had things like, if it was a multifamily and I wanted to do some monthly income on property like laundry facilities or something like that. Electricity, this is a single family residence, so I'm not going to add any of these. PMI, so I'm adding 20%, so I won't have PMI. Garbage, HOAs, monthly insurance. I do want to have a monthly insurance, okay? So basically you're looking at 0.5%, so about $500 per year that you're going to be operating on, okay? Sorry, hold on 2 seconds, let me silence this phone call. So $500 per year, all right? So simply divided by 12, you're going to be looking at about $41 per month, okay? Property tax is already estimated based on that number that we just had, and any other monthly expenses that we did have on a regular basis, okay? I don't have property management in here because it comes next. Vacancy rate. So this is where you start to get into your working knowledge of everything. Vacancy rate, we're going to use 7.5%. This is the industry average. If you click over here, it actually tells you that the typical vacancy rates are between 3 and 10% by monthly gross rent. 7.5 keeps it nice and safe. Repairs and maintenance. You can't just buy a property and hope that it survives the life of longevity. So I'm going to put in 5%. I think that's a healthy number to have. These are for all, remember, you're looking at what the collective is for the entire year, but this is basing it on a monthly basis, okay? Capital expenditures, you need to improve on your property. So I'm going to put away 2% per year or 2% per month to add up to my roof when I have to put on in a couple years, or I have to replace something. This is just that little safety net. Property management, we're going to add 10%. Annual income growth. So we want to see what is the rent going to grow at. El Paso, 2% is the average, okay? Annual present value growth. Now this is basically what you want to show the value of the property today as to what it will be in the future. We're going to go 3%. That's industry average for El Paso. Annual expenses growth. Now, this one you don't necessarily have to increase because it will increase by the value of what you're operating at. So as you grow your income, it will automatically grow based on all these rates. Sales expenses, what is it going to cost when they bring it back to you to sell it? Let's put it in there at 9%. Okay? Now, I'm going to go into calculate results. Now, once I do that, this creates a nice, pretty report that I can show my client and build my value per se as I'm going through this transaction, okay? So this operates an analysis over time. 0% over the first year, 2% year, and 3% year, okay? So this is expense, income, and property value increase. Total profit if sold, okay? In year 1, in year 2, in year 5, and in year 30, okay? So there's a lot of value to be added this because this is showing what they're making on a regular. It also shows them that they're making $995 a month, they're spending about $534.78 a month, and they're bringing in monthly cash flow of about $460, which is 5.21% cash on cash return. Now, cash on cash return is one of those terms that you want to grab, and you can just simply take that. Yes.
Just real quick, with their spending, does that include a mortgage if they're borrowing money, or is that just?
So it can. Remember, in this particular example, we used a total cash purchase. But if you change that to a finance purchase, you could go back and edit that report. So if I go back and I edit this report, I could change it from a cash purchase into an investment purchase. So it's going to take you back to that front page. You simply skip through and loan details. So I have it selected as cash purchase. If I take that off, I can put down payment as 20%, loan interest rate of 4.5, which is the investment rate right now. Charge points by lenders, I'm going to put it at 1 point. I'm going to put this as a physical number. It should be 1. Okay. Other charges from lender, and then I can wrap loan fees and loan, or I can pay loan fees out of pocket. I'm going to wrap them. And then I can say it's an interest only or amortized over how many years. I'm going to put over 30. Okay. And then typical cap rate, same thing. So that changes my report quite a bit because now I've added in a loan purpose into the equation. And you'll notice my cash on cash return went to 2.35%. Okay, so it brought that down, but my cap rate actually went up a little bit. My pro forma cap rate went up a little, or went down a little bit. These figures, guys, I can go over a full hour class about what these mean. Just simply grab them, and once again, go over to Investopedia, drop it into the search term, and then look at the definitions. Guys, you got to read these definitions. People are going to ask you these questions. You need to know what they are. So this is now a finance deal. So my rates all went down. It didn't become, it's not as good of a deal anymore because I've put in other figures into the equation. And now my monthly income is $995, but my monthly expenses went to $944, which leaves me a very trim amount of cash flow on a monthly basis. Does that make sense, Norma?
Yeah, it does.
Okay. So monthly insurance, this has your P&I, your interest rate, your amortization, your loan points, your loan amount, down payment. So in this case, it adds all those figures up and puts it all together. This shows your client that you did some due diligence to put this all together for them. And the nice thing is if you pay for the premium version, when you download this report, you can actually put all your information on it. So you can actually download this PDF. And when you download the PDF, you can actually put it in a nice, clean format. You can actually share it as well from here directly, but you can also upload a company logo. I don't think you can do that on the free version. And that way it's branded to you. And the benefit here is that you're showing them some sense of value. Now, this report took me a total of about 5-10 minutes to create, but in their mind, this is going to show your true benefit in using you as an agent, okay? Because this is going to show you all these details, okay? Now, once again, you need to know all your numbers, okay? You need to know what all this means. Now, in Biggerpockets, there are some additional education tools that I suggest that you go through. There's free courses along with paid courses. There's also a great podcast. I know a bunch of my team members listen to it. I know Nick listens to it. It's a great podcast. It gives you some really powerful information. There's also some forums, okay? So forums give you some extra benefit in the equation. The other key point here is that you want to show all the value that brings to the client, okay? Showing them where their value is across the board, okay? Now, if you need to do more than that, if you need to give more robust information, there are a lot of templates out there that you can use in Excel. Now, I wouldn't suggest you doing this until you're prepared and know some of the working knowledge, but I have this Excel sheet that I took from somewhere, one class. I'm sorry?
Sorry, one more question. Can this be used for commercial property, or is this only for residential, or does it matter?
So it can be used for both, ideally. I mean, you can create it in both value. So it creates multi-units. You can create a multi-unit information. You just have to type in all the information. So it's for both is the answer. Okay. I will share a link to this usable template. This is something I found online at one point or another, and it has a really powerful benefit. So basically what you do is you enter all the yellow data amounts, and you can type in address, you can type in asking price. This is where it gets really robust in the informational base. You need to know things before you jump into this one, because this one can get a little complicated. But I'll share a link to this. My only suggestion is I will not make it editable on the one that I share. I'll make it editable. You just have to copy it in order to edit it, okay? But this gives you a little bit more detail that once you know how to use these conversations, how to use them effectively when you're talking to a client, and understand what cash flow analysis are, things like net operating income, total debt service and cash flow, knowing what your market cap is, and knowing what your detail is when it comes down to it. So things like maximum allowable offer. This will give you a little bit more robust method, whereas Biggerpockets is basically the quick and dirty version. But if the client is asking for 4 or 5 of them, maybe do this route, and then once you're comfortable and you know what you're talking about and you know how to discuss it, then you're going to go into the usable template that I'll post on the YouTube page. Okay? Now, go ahead.
If you have a client that wants a specific cap rate, could you work this backwards to get that cap rate and give them the numbers of what their offer should be or their investment should be in order to get that cap rate?
So you could, but you'd have to work the report backwards, meaning you'd have to change the price to where it feels, you'd have to change it until it got to the cap rate. There's no reverse method. You know, my usable template doesn't have a, so my usable template uses a maximal allowable offer. So it's a little more robust, and it does give you what that is looking for. So you basically put in what your estimated or your hopeful is, and then basically you put in that number in here. So basically a MAO, or a maximal allowable offer, for low occupancy where economic value. Basically this will work it a little bit backwards, but once again, the easiest way is just to go and edit that offer price until it gets to the cap rate that you're looking for. Make sense? Cool. Okay, so that is the rental property calculator, okay? The only other one that I'm gonna talk about today is the BRRRR, and this is the buy, rehab, rent, refinance, and then repeat. And the reason I want to show you this one is because I want to encourage you all to actually get into doing this. Now, I will tell you that as me, Nick, and Andrew can attest to, this was not as easy as we expected it to be our first round. It will become easier going forward, but it does take a little bit more time, energy than maybe it's advertised as, but you know, it's a nice clean way for you to also show value for your clients. So this is a real key way to get a person that may not have a lot of cash up front, to show them a way to get into investment. Okay, so let me create this real quick. Same detail. Once again, you would fill all those features out. We're going to use that same price, 100,000. Okay. After repair value, we're going to aim this one a little higher. We're going to say that this is a better deal that will be worth about 130, same $1,000. Estimated repair cost, we're going to call it about 5,500. Okay, cash purchase. If we're going to do that as a cash purchase, in this case, we're going to purchase it as a cash offer, because remember, we're refinancing it, okay? So cash purchase, we're going to use things like, so we're going to say we're going to refinance this in 4 months. Rehab time, so refinance, or we're going to say this, we're going to refinance this at 6, and we're going to hope that do the rehab in 3 months. Refinance details, we're going to bring in the amount of that same 100 and let's say 5,000. Okay. We're going to bring in an interest rate of 4.5. Any other fees, I'm going to leave that open. I'm going to wrap the fees in. PMI, yes. Amortized over 30. Typical cap rate for your area, 8%. Okay. I'm going to say that I can rent this for $1,100 after I get it all nice and pretty. Okay, no other monthly income. I'm going to put my monthly interest at 50. If you're asking why I'm putting these numbers, guys, this is just not working knowledge. I'm just trying to get through the report so I can show it to you. I'm going to do that same 7.5, that same 5, 2, and 10. I'm going to show my present growth at 3, income growth at 2, expense growth at 0, and sales expense at 9. And I'm going to calculate. Now the difference in this report is that it's going to show you a few more details on that information, okay? Now, you got to be careful because right here, if you'll notice, my monthly cash flow is negative, okay? But it's negative $1. Okay, now, what that means to you is this, that basically what you're renting it for is ideal to what you're actually getting it at, okay? Now, in that you can change this report to show initial rental period, okay? So what you're spending, what you're making, and then rehab period, okay? So you can change these reports to benefit what you're looking for and how the detail is going to work. Now, when you refinance this, remember, if everybody recalls, we put in a total of $106,000, okay? But we refinanced out a total of $105,000. So for $1,000 investment total, we are now making approximately negative $1, which in some people's minds might think that that's a bad deal. And it's not a great deal, but at the end of the day, you just bought a house for $1,000 because you refinanced everything out. So you've now purchased the property for $1,000. Now, the hope is that eventually, as you can tell down here, that property will become very profitable for you in the long run. And remember, this is already calculating in a vacancy expense and a capital expenditure expense. So even though this has a monthly negative cash flow, technically there's $82 in there for when you do have it rented. There's the $22. So those things are also income. But it shows that you can make money on $1,000 invested into a property. Now, you had to put out $106 to get into it, but you were able to refinance out of $105. So it is a very powerful tool, and keep in mind that say we got this instead for less, okay, you would be able to get your numbers even higher, okay? And keep in mind that we also had an initial rental period for a couple months where we rehabbed it, and we had 2 months of extra $500. So we made back that $1,000 that we even spent on the property, okay? So because for 2 months we had it rented while it was rehabbed, and then we were refinancing. So we were making money whilst we were trying to refinance it, okay? Very powerful information. You do have to understand it, and that is the key. And that's why I wanted to introduce you to the Biggerpockets podcast, Biggerpockets website, because this kind of information is very powerful when you're having a discussion with a client. For instance, said client walks in and says, hey, Brian, I want to buy 5 properties. And he says, I got $100,000. Well, $100,000 is not going to take you very far unless you have the right tools and know the right areas and how we can adjust that, okay? Because remember, let's say we didn't take out the full 105 in this particular scenario. Let's say we only took out and we left in $10,000 or $15,000, okay? If I go back and I adjust those numbers to where I leave a little bit more money in the deal and I don't try to take it all out, and let's say instead of $105,000, I take only $90,000 out, okay? So I'm leaving about $16,000 of my money in the equation. But now I take that same detail and now I'm making $74 on it. But remember, I'm not making $74. I'm actually making $74 plus my vacancy, plus my capital expenditure, and plus my repairs. Now, granted, some of those things might happen, but remember, this is where you do your due diligence and make sure that this is only $5,500 for this year, and this will hold us over for a good long amount of time. Make sure that the roof is all good and everything like that. That's where you need to know your numbers are correct. So, guys, really powerful stuff. And like I said, your cap rate goes up to 6.37. So adjusting this number to make it where you really want it to be is key. So let's say we got it for a little bit less, or it was worth a little bit more afterwards. You got your rent rate up to the right number. All these things come into play. Or in your all scenarios, if you work for the company, remember this right here, property management, you just made $55 more because we only charge 5% for property management, okay? That right there can save you a ton in the long run. So just that $50 more takes us from $74 up to $105 or $125 right off the bat, $130. Okay? Other than that, guys, we're at about 30 minutes, and I'm trying to keep these on a real good timeline. So questions from anybody? Show if there's any chats.
Brian, so these were based for rentals, right? To figure out the cap rate for, can you do this for a flip, for a client that wants to flip a home? Mm-hmm. Would it work the same way?
Of course. So remember, as I showed you over here, under the calculators, there's a flip and fix and flip calculator too. Now remember, they only give you 5 free reports, so be cautious about how you're using it. Now, I showed you in a previous training how you can use your Gmail account to create multiple accounts. You probably don't want to do that because this is going to end up messing up. But I mean, the service on this one is, I don't remember. I think I pay like $29 or $39 a month for this. But the podcast, all the other tools are really powerful. So I mean, it's good stuff. But yes, Norma, you can do an entire flip, and you can even go into an advanced flip calculator that will get into a lot of detail work. Any other questions?
No, thank you, Brian. I just, this is so beneficial for those of us that are even thinking of maybe, expanding our portfolio to figure out if, our money is going to be well spent on a property that we're looking at.
Absolutely. And hey, guys, really realize this, that, so Inya, just to answer your question, this will be uploaded to the YouTube channel. You can rewatch it. I apologize. I'm not sure why the screen's blurry, but I will definitely take a look at what happened there. But to that extent, basically, guys, it's just coming down and identifying what is the best way to, one, add value to your clients, two, create wealth in real estate. That is ideal here. Remember, wealth in real estate is what we're all aiming for. You can sell $1 million worth of real estate, but if you don't invest that in the right tools, the right technologies, the right places, the right longevity, then you will never have anything. I think we all know realtors that are in this business that have been selling for 50 years and don't have a penny to their name, and if they don't close their next deal, they won't have any money. We don't want to be that way. We want you to increase your wealth based on finding value. We've always encouraged you to find a way that you can purchase more property. Find a way that you can create more value. We offer the 5% to everybody because we want you to create that value, and that's the key. So, other questions? No? No more chats? Excellent. Guys, we're at 34 minutes. I appreciate you taking a few minutes to jump on. Once again, this is going to be on the Facebook page. It is also going to be posted onto, it will be posted into, it's called Biggerpockets.com. I posted that in the chat. I also posted onto the YouTube page. Guys, remember the YouTube page is just HaggertyTraining.com. Okay, so HaggertyTraining.com, and that will be the direct link into the YouTube page. If you subscribe, you'll get notified whenever I upload those links. Guys, I appreciate you taking a few minutes with me, and hopefully this was somewhat detailed enough for you for some information. No, appreciate it, Christina. Thank you. And hopefully from there we kind of find value in what we're trying to do. Biggerpockets, guys. If you click onto this education tool, there is a ton of guides in here. Guys, I told you about Investopedia. Once again, it's understanding the right terminology. You have to talk to certain people in certain manners. It's also going back and creating value for your previous clientele. Remember, everybody that purchases a property can become a real estate investor. It's just a question of when, where, and how they become a real estate investor. And just for fun, if you have any other questions, jump in, add some value into the YouTube page. We're getting some subscribers. We're actually getting subscribers from outside the company, so it's opening some doors. If you have any questions on trainings, anything that you'd like to see, please don't hesitate, ask for it, and we will do our best to make it happen. Okay? Other than that, guys, if there's no other questions, I'm going to sign off. No? Haram, you're good? I love Haram. He's doing it at work, making money. Okay, appreciate it, guys. Have a great day. And if you need anything else, don't hesitate. Thank you.